Hello, folks. Welcome to the Weekend Investing Stock Market Weekly Review for the week ended 16th of May. And what a week this has been. Uh, I would say that at the end of last week, market had gone up, but we were not expecting uh, a market to boom like this as the conflict went into the background. The defense sector has taken the market by storm. And it is not just India's defense sector which is booming. Global defense ETFs are booming. So it is just a sort of a very prevalent phenomena that is happening globally, that defense stocks are doing well. And of course, we have the reason for uh, amazing new order books for our missiles, where it is said that many countries are lining up and the demand is very robust. From our research desk this week, we had stories on how the dual gold and equity portfolios give better long-term returns. A story on McDonald's, how McDonald's sales can predict the markets. Um, Investment culture in India, how it's changing and how it may just be, the start of it. Uh, there have been many instances in history where markets have gone through decades without real returns. So a very data-backed analysis there. Why every investor needs an exit plan to avoid big losses and protect their portfolio. Indian markets seeing big turnaround. Have we seen the bottom? Past gains, of course, don't guarantee future profits. As case study there. Busting the myth: quality companies may not go through steep correction. So this myth that we have, that if we buy good quality companies, we may be not subject to deep corrections. Uh, Another story on gold versus other currencies, and why multi-asset allocation is the smartest strategy for 2025. These and many more such content stories on the Weekend Investing app and the Weekend Investing blog and newsletters. Do read the disclaimer fully and understand it. Do, of course, subscribe to the channel also if you haven't so far. So, Nifty daily chart, you can see in the last five sessions, we were here last week. This was Friday. And then Monday, we gapped up beautifully and a very strong candle the entire Monday. So, just in one day, we went from virtually 23,800 odd to 20 near 25,000. So this jump itself was the main highlight of the week. And then there were two rest days after that. Thursday again, it was a volatile day. Nifty tried to trap people on the downside and then went up and clocked a new recent high. And yesterday, Friday's move was very tepid and just about flat. Overall, 4.2% gained this week. This is the weekly chart. You can see we are a stone's throw from all-time high once again. And just 5 weeks back, we were here at 21,800, and talk was of about whether we will go to 20,000 or 19,000, and here we are at 25,000. Just actually completely telling you how markets will have a mood of its own, and nobody really will be able to consistently predict the market. Hence, following the market remains the only way of making some sense out of this. S&P 500 also has rebounded very, very handsomely. 4860 was the bottom here, or somewhere near that, and we are already at 6,000. So almost a 20% plus jump has happened in 4 to 5 weeks for the US markets also. So suddenly now the world seems to be a very normal place, although there the underlying lot of themes are very disturbing regarding tariffs, regarding these uh, bilateral issues between few countries. Um, so the it seems like a calm before the storm, but you never know. This calm may continue for very long period. None of the countries have really sat down and finalized any tariff deals except UK, perhaps. So there could be turbulence at any point of time. China could tomorrow again back out, but everybody wants to return back to normalcy, and hence the motive to disrupt these uh, talks does not really exist. We also had this surprise event at Palgam, for which we had to retaliate. I mean, had Palgam not happened, there would not be any of that event actually happening for India. So you never know what's in store ahead. But right now, the markets look extremely robust. Gold has been smashed down this week, 3.5% this week. The last week, we were near 97,000 odd for 10 grams. Now we are at 93,336. It has recovered a little bit from 91.13, but it is undergoing some consolidation. Somewhat what happened in these phases also. These phases also. Not no chart pattern really is saying that the long term trend is has changed. We are basically going strong trends rest, strong trend rest, strong trend rest, and who knows where we go next. Dollar index, which was uh, touted to go down to somewhere near 92 by end of 2026, is creating a flag. Once this flag is done, likely we will see a formation of a continuation of this leg down, and that is going to help emerging markets and gold in a big way. All risk assets go up when dollar index goes down. In the benchmark indices overview, you can see Nifty has come back to 4% plus for this last 1 year, 1 week. 8.79% has been clocked on small caps. So small caps are the biggest gainer of this week gone by. 7% on Nifty Next 50, 6.9% on mid caps, 5% on Nifty 500. So this week actually is a big week, because if we see over a month also, small caps are 6.65. So this week actually turned around the entire month. Over 3 months also, small caps are up only 13.8, of which 8% plus has come just in this week. If we see on a yearly basis, Nifty Next 50 is still nearly flat. Small caps are still only 5%, of which 8 point some percent have come this week. So minus this week, for 1 year we were down negative, but now we are positive. Nifty is looking very, uh, I would say, normal at 11.7% for the year, which is the very long term historical average also. In the last 5 years, Nifty has had a fantastic gain of 22% on average, which is far higher than the long term average. So the last 5 years have been phenomenal for almost all indices. You can see Nifty small cap has clocked 36% annualized returns in the last 5 years, whereas the historical mean is somewhere near 15 to 16%. So still much farther ahead of historical numbers. On a 3 year basis, also much ahead of historical numbers. And on 1 year basis, we are on Nifty at least come back to normal basis. We are still lagging on small caps and Nifty Next 50. Maybe some more time will need to be spent. Consolidation phase, but market doesn't look like it wants to consolidate. It wants to shoot up, and why should we look for consolidation when market wants to shoot up? In this 1 week, defense stocks have gone up 17.2%. Just 1 week. Just see where we were in 3 months. Defense is up 52.8%. And in 1 year also probably the same, 48.8%. So this week has been a phenomenal week for defense. Phenomenal week for capital market, 11.6% coming just this week. Metals up 9.3%, media up 9.1%, and real estate 10.8%. So these are your biggest winners of this week. These are the leadership sectors in the market. Um, there is no sector that lost ground this week. Banks were a bit softer at 3.3%. PSU banks, of which were doing better than private banks, 5.8% on PSU banks. Pharma and FMCG taking a backseat, so which normally happens whenever the market aggressively moves ahead. Pharma, FMCG, and IT also sometimes take a backseat, but IT has done reasonably well, 5.8% here. Autos up 5.9%, and metals also doing very well. In the last 1 year picture, if we see, capital market and defense have done very well. Banks have done all right, 15%. Financial services have done very well, 23.6%. You had private banks, services sector, and pharma also in double digits. The only bigger losers were energy at minus 11%, media stocks, MNC stocks, metal stocks, even oil and gas very flat, public sector enterprise stocks and PS. PSU banks, along with real estate. Real estate has taken a correction in this last 1 year. In the momentum scores for 1 week, 1 month, 3 months, 6 month, and 1 year basis, services sector has remained at the top, although in the very short term it is losing ground. Real estate has been at the top in the last 1 week and 1 month. Private banks, which were doing very well on longer term basis, have in the very short term started to slip. And the new winners you can see here, defense stocks are right here, capital markets is right here, and tourism is also right here. So you can see that some sectors are coming back in flavor, like real estate, like public sector enterprise stocks, perhaps even tourism stocks, media and metals. And there are some which are losing ground in relatively. So services sector is one, infrastructure is another one, IT is another one, and autos are also losing ground versus others. That's the makeup on the momentum score. Uh, in the weekly advanced decline stats, you can see that it's virtually all green. Hardly 6% stocks in Nifty have lost this week. 100% stocks of Nifty Next 50 have gained. 2% of mid caps have lost. 4% small caps. 4% micro cap. And just 3% of CNX 500. So it is a complete bull uh, dominated week that went by. In the percentage of stocks outperforming benchmarks, CNX 500 is seeing 78% stocks which have outperformed the benchmarks this week, which is very good. Small caps and mid caps also are robust numbers, and Nifty Next 50 are at 66 and 68. So this week, the push has come from the second part of the market, not the top part of the market. And that is very evident right here. Over the last, let's say, 1 year, it has been exactly the same. So while the 1 year has remained the same, there have been periods where Nifty and Nifty Next 50 have created that boost. And then there have been periods where the small caps have created that boost. In terms of drop from 52-week high, the entire spectrum is shifting leftwards again. So you can see that for Nifty 50, uh, almost 70% stocks are within 20% of uh, the all-time highs, 52-week highs. Nifty next 50 space, we have almost 76% right here, 78% within the top 30%. Mid caps are still spread out towards still 40% drop. Small caps also here, micro caps also here. But as we move up, these bars will shift leftwards, and you will see more concentration here rather than here. Is the trend improving or declining? So certainly there has been a big jump in stocks that are above the 200 DMA of the 500 stock, top 500 stocks. You've seen a jump from 24% to 52%. So almost doubled from last week. The number of stocks that are above the 200 DMA, which is very positive. And above the 50 DMA, we have now 77% stocks of the top 500 stocks above the 50 DMA. So that is also very positive news. In the trend check above in the sectors, you can see many sectors which have all stocks above 50 DMA. So basically, all these sectors have done better than CNX 500. So autos, oil, gas, commodities, PSC, infrastructure, energy, private banks, so on and so forth, all are above 80 to 100% above the 52 DMA. On the 200 DMA, still a lot of sectors have to do a lot of catch up. So, for instance, real estate, only 10% of stocks are above 200 DMA. 30% of stocks in IT are above 200 DMA. Whereas in private banks, you can see financial services, FMCG, significant number of stocks are above 200 DMA. So that tells you how the sectors are stacked up versus each other right now. In the FII DII stats, FIIs have come back with a vengeance. 930 crores, then 5,300 crores, and then 8,800 crores. So big moves, and only one big selling that was last Friday. This week, it has been a positive trend. DIIs also only one day of negative sales. Other than that, some robust numbers are there: 5,000 crores, 4,000 crores, 1,400 crores, and so on and so forth. In the cumulative FII and DII activity, you can see both trends are now upwards and very strongly upwards. 30,000 crores in the last 1 month by DIIs and 54,000 crores by FIIs, and that is basically the outcome of that is visible on the indices. So good situation exists in the market now. There is no overhanging cloud as such. What may come as a surprise will come as a surprise, but right now, as things stand, we are cruising very well. So make use of that and play along the trends upwards. And I'll see you in the next week's review. Till then, have a good day. Have a good day. Thank you. Bye.